What's up guys, I'm Paul and welcome to the channel. So on YouTube there's a lot of noise in the personal finance and investing niche of people not giving you financial advice but telling you exactly what you should be investing in. And if you're just getting started on your investment journey, this can be quite confusing because there's lots of people telling you lots of different things and you're not sure who you should listen to. Well, I'm not going to do any of that in this video. All I'm going to do is explain the reasons why I decided after doing quite a bit of research to invest solely in index funds when it comes to investing in the stock market. So the first one of these is diversification, because with the index funds that I've chosen to invest in, I'm invested in all different markets and all different sectors around the world. In fact, I'm invested in thousands of different companies, something that I wouldn't be able to do if I was trying to build my own investment portfolio by choosing individual companies. And as diversification is an important part of building a successful portfolio that's going to be good over the long run, it's one of the reasons why I chose index funds. And the second reason is returns. Now, I know that over the short term there are individual stocks and certain fund managers that will beat the market. That's a proven fact. But when you start looking at long-term returns, very few of these individual stocks or fund managers have consistently beat the market. They might do it over a short 4 or 5 year period, but when you start looking at longer term investments like 20 plus years, very few fund managers have actually managed to beat the market consistently over that period. And that's why I'm happy to just buy the market and accept the returns that the market offers. I'd be happy with 8 to 10% a year, which once inflation starts to die down, hopefully will be a much better return. And this is proven by the fact that Warren Buffett actually placed a bet against hedge fund managers that he thought the S&P 500 would beat a hedge fund over a 10-year period. And he proved to be right. He ended up winning $1 million bet on that one because the S&P 500 outperformed hedge funds. And that's why I'm quite happy to invest just in the market and get the returns that the market offers, rather than chasing those short-term gains. I'm more chasing the long-term, almost more consistent returns that hopefully index funds should offer. So as I've just mentioned, fund managers, let's talk about fees. Because if you invest in a mutual fund with some of these superstar fund managers, you're going to be paying really high fees, which means there's less money actually in your portfolio being invested. And that's one of the reasons why I love index funds. Because they're very passively managed, it means the funds are really, really low. And because the funds are low, that means there's more money in my portfolio, which hopefully over the long term, which will mean there's more money when I decide to start cashing out my portfolio. Well, that's the hope anyway. Now, the next reason why I solely chose index funds is because they're easy. Basically, I just choose the funds that I want to invest in and then invest that money every single month and basically leave it to do its thing. I'm not having to actively choose different stocks. I'm not having to read balance sheets. I'm not waiting for earning reports. I'm not having to listen in on shareholder conference calls to see what that company is going to be doing. I'm not having to do any of that analysis. It's just a case of choosing the fund that I want to invest in and investing it on a consistent basis. And that leads me on to the next reasons why I solely invest in index funds, and that is it's incredibly passive. As I said, I've just chosen the funds I want and I invest in them on a regular basis. I'm not actively having to manage my portfolio because I'm just doing my regular monthly investments. Yes, every so often I'm going to have to do some rebalancing to make sure I've got the allocations that I want within my portfolio, but I'm not having to actively manage it. I'm not having to choose when to buy into a certain company and when to cash out of that company. I'm not having to do this kind of active management. It's just passive and it's just working away in the background, which I'm more than happy with. And the final reason very much follows on from the previous two, and that is that it saves me time because I'm not having to do analysis on companies. I'm not having to manage my portfolio, choose when I'm cashing in and out. I just leave it to do its thing. And because I'm self-employed, I can spend that time making more money in the here and now because I've got another YouTube channel that makes money, I've got a blog that makes money, and hopefully this channel will make money in the future as well. So I can invest my time making videos, writing blog posts, or building other skills that are going to make me more money. And if I'm making more money in the here and now, that means there's more money I can invest in my portfolio to hopefully give me better returns in the future. So those are the reasons why I decide to solely invest in index funds, because basically it matches the way I want to invest and it fits in really well with my lifestyle and also my long-term goals as well. But let me know, what do you think of index funds? Do you think they're a good way of investing or not a good way of investing? Let me know in the comments below, because I'm always interested in hearing other people's opinions. So thank you so much for watching, guys. I really do appreciate it. If you found this video helpful in any way, shape or form, a like would be absolutely awesome. Also consider subscribing for more money related content. So once again, guys, thank you so much for watching. I really do appreciate it. Stay awesome, and I'll see you in the next one.